General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, get this. Alright. All the news is coming out the last week of the month. Okay. It's interesting because it is the middle of the month. Confirm or reverse anchor point status. I mean, that's an anchor point if I ever seen one. I know, right? We ain't used to seeing them right here. It's like, what? You want an anchor right there? Yeah. Hold on, no, that's the wrong one. Hold on. Let me just move this one here. It's probably this one. Yeah. Yeah, I mean, the only thing about saying, okay, this is the high, let's go down, is there's really no catalyst. But let's say we do a retracement. I think this week we wait for news, which is the week after that. Monthly bias, this would be. Because I said at the monthly open, we wanted to go higher. I think we already hit that. Yeah, 250. Yeah, and we hit our targets for silver too. The only thing that didn't do nothing is EU. Everything here is efficiently traded. Like our next area of interest is actually this here, and this lines up with our 60-day IPTA range. But these are our next areas. So since it's all efficiently traded, I'm just gonna look at 50%. We can kind of dig in here, but I'd rather look at weekly and monthly levels within here to find targets. But from this point of view, we could say hold on. Hold all-time high. Broken, closed, pushed up. What is this? It's 2025. We do got this old imbalance from a long time ago. But I remember targeting this. This is from American Liberation Day. It's actually kind of fun looking down here. So 60 days first, and then we'll go look for the other stuff. I might actually redo this whole chart. You know what's wrong with that high too? It's a down candle. I don't think this high is a long-term anchor point, but for the month, I think that's the high. So lower, we got the 60-day look back target. Let me get that daily level too. Where was I at? And February's high. What's this? February. There we go. That's where that's from. And the high from February 18th, 25. Monthly buys. We're at we at EQ of the IPTA look back range. Which is man, we can chop. Everything's balanced though. I think lower. We need to find a base. It would be nice to get down to February, but I don't want to just push it. If I measure this, because what if we just closed and we were supposed to go farther? Like Friday, everybody went home on lunch. They was just like, bump it. But we really need to go here or here. Timing that is crazy, though. The framework don't miss. The framework don't miss. I don't got no case studies right now. Did the month deliver the bias? I said, yeah, we went. Yes, early, mid, late month timing went high, low, pretty. Not the session timing. So the high actually printed. Hold on, let's see. We literally got the high and the low in the same day. To Trump, China tariff. Hold on. Expansion mitigation signals. Yeah, nothing. Decision quality has been good. Super good. I'm starting to understand when to shoot and when to not engage, and which account is the most strategic. Narrative framework accuracy. It was kind of iffy since we had the government shutdown. But switching, to bread and butter and falling back on the swing trades helped out, because look what I avoided. For real. That was smart. Which substantially actually built the monthly candle this week. Due to Trump news. What did price mitigate the daily EO line? Okay. Okay. Who was the success for this one? Choosing when to strike. And settling on trading RTH cap for bread and butter. Gotta be that RTH gap just shows up so much. Screenshots and notes is in the journal. I'm gonna have to do. Hold on. One of the cleanest deliveries. Oh, I can post a link for that one. That was that one shot, one kill. Also, trade posted and journal. Cool. Yeah, that's in the Notion. Matter of fact, put this here. Yeah, 1.6 trillion. Crazy. Yeah. Honest here. No news this week, but I'm thinking good runs. And it's time to start staging buy positions for long term. And I know everybody else is thinking that because that last dip, everybody probably was scared. And now everybody's like, oh, I'm not going to miss this one, especially with crypto. What's crypto doing? Who we still dropping? Okay, stay focused. Tuesday, 70% chance for Tuesday. Let's see. Do we got some yellow folder or somebody? Yeah. Tentative. German, okay. Powell, Tuesday. Monday, holiday. PPI. It says tentative. Waller. Ooh, holiday is Monday. What is that? There we go. I really don't even think we're going to have PPI. I know CPI is supposed to be last week of the month. Ain't no COT because of government shutdown. Let's see. Fed Watch is probably at a 200% chance of a rate cut. I think government shutdown is going to mess with that unemployment too because government people got to go to work too. I seen some people saying they didn't get paid, but I don't know if it was joking or not because I think they're getting paid. 98% chance of rate cut. 98% chance of rate cut to the 29th of October. What's going on here? JP Morgan, Johnson & Johnson, it's going down. Wells Fargo, Goldman Sachs, it's going down. BlackRock, Citi, ASML, Bank of America, TSM. All right. We got some volatility. Hold on. We can start buying. Let's see. Hold on. Let me get this link chart right quick. Because I don't think it ain't no top 10. NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Tesla, Netflix. That's 10. Boom, boom. And they'll be here. Nope. And nope. They never report on Friday anyway. BlackRock, Citi. Yeah, because this is important. Banks. This is tech. ASML. It's not top 10, but it's up here. It's 13. Okay, earnings season kicking off. TSM and ASML. Let's see what days those are. Nope, they are not top 10, but they are sentiment. And hold on, what day is that? ASML is Wednesday, and then TSM is Thursday. So Wednesday ASML, Thursday TSM pre-market. Wednesday and Thursday. Ooh, hopefully it's Tuesday low. Banks report on Tuesday. Banks are Tuesday pre-market. Man, that was, thank God for earnings. I don't know if that's gonna be, if this might change this week, because the 8th, that was before Trump did that. This could change, but earnings could shift things back bullish pretty fast, especially TSM. I mean, ASML is pretty much the backbone too, but TSM is the backbone of the NASDAQ. I mean, even that sentence in itself is like, just own 100 shares of TSM, because what's this, 9 weeks of days? Is that bonds going crazy? That's going to be short-lived. Yeah. 9 weeks of days. That was a strong level, huh? That's crazy. I just made this and it was a strong level. 1, 2, 3, 4, 9. Here. Yeah, I don't have no new levels down here. I don't even want to form fit no levels down here because this is a new range. This is quarterly level, quarterly open. This is important. Take this off. Is that August Premium Week? Showing up for work? Nope. Coming soon, though. Coming soon. I do like how we reacted off of this. Here too. Oh, how that we broke down here. We can keep that level. Then sell side liquidity down here. And we got August Premium Week here. Oh, snap. Let me just keep that. It's a holiday. So I'm thinking, hold on, is the market closed? CME trading hours. Is it Memorial Day? What's holiday? What is that? 10/13. I don't think the market's closed. But bank holiday is Monday. Yeah, ain't the shit closing for Columbus Day. I need to take that off the calendar. Have me thinking about the market. Monday ain't even a holiday. No disrespect to Columbus. Thinking we drop Monday. I will watching the news. not jumping in to just start buying. If we retrace hard, we could get an even bigger drop just to shake out early buyers. What's it? October. We could take that out for Christmas. Anchor point to action. I think that house stays for the month. I don't know if it stays past NVIDIA earnings. Story price alignment. Trump brought things back to discount pricing because he is kind. Set up and engage. We want to engage. When others are fearful, be greedy. Let's go to silver. And this should be here. 1, 2, 3, 4, 10, 11, 12, 13. Perfect. Here. Okay, this, like, we don't even got, but we need to do a real pullback, but we don't got no levels up here. Our last real pullback is after we broke here. This is really one-sided. And I bet we smacked everything here. Oh wait, where's this? Here. This is our IBDA. Here we go. $52.07755. What's this? 1.618. Should be blue. We got price here now. We have price here now, so we don't need that. This is our next level here. What is this? Okay, it's just a range. Yeah, I don't need that. This gap is filled. This is previous month's high, so we can keep that there. From here, let's see what that is again. Where we at? 52. Next objective is 52. We might actually get a retracement at that level. What is this? This last dip in September. Yeah. Price has been one-sided. The anchor happened a long time ago. Stored price alignment, the government spending money. Some precious metals are running as a hedge against inflation. But we're engaging. Buy the dip, let it rip. Yeah, still buy the dip. Until things change. You can just wait for the day to be down and buy. For real. I need not. 1, 2, 3, 4, 10, 11, 12, 13. All right, this is where we at. We just took this out. We could go a little bit lower. Just because it's always good to shake them out one more time. Okay, so that's the new. I'm going to keep this here. Oh, yeah, this is what ICT was doing. Because he was measuring these wicks. Because he was picking the intermediate term lows, and he was picking these wicks. So he would pick the longest wick, like down here, and watch these levels. Then he'll pick the longest wicks down here and watch these levels, which makes so much sense. Shout out to ICT. And then see how it kind of sat there too? I'll keep that. We could revisit those levels. There is no gaps here. There's a little volume imbalance here. Is this a suspension block? Oh, snap. This is my first suspension block. Bearish suspension block. And it's on the daily. So let's do this and put a middle line on it. I wonder, does it start on the volume imbalance? Let's take this off and then take this off. Well, this end up being an inversion level. We buy above this. I could frame a shift here, use this as an order block, or even grade this or this one and watch it to go up. Let me see. Yeah, I'll just keep an eye on that. This will be my swing. Because the dollar should be done retracing now. Watching for a CSD here. The dollar should be done retracing. No, next week is all the Dixie news. So if we can get in and be in profit and risk free for news, it could be all upside. Anchor point tracing just took out daily consolidation low. I want to see this anchor point confirmed this week. Story to price alignment. The dollar should be done retracing. Definitely engaging here. It's the best swing trade because we can look left. Okay. Skill, focus, patience. And I do like that one good trade. That was a good book. German intent. There's more screenshots. And more intention setting to start the day. I've kind of been looking at the regular trading hour gap. Nothing in particular. We're going to keep it free range. Boom, boom, boom. All right. We good to go. All right. That's that on that. Y'all have a good day. Peace.